What's going on, everybody? It's Jeff here. Welcome back to the channel. I've been waiting to make this video. I woke up this morning and had a lot of messages and also saw some comments on the video I made the other day asking what my take was on AMC and buying options. All right, it goes against the theory of buy and hold. So in this video, I'm going to break everything down for you. And most importantly, I'm going to talk about what is being done completely wrong, specifically when it comes to AMC call options and how it is actually helping the market makers aside from their own manipulation. I'm going to talk about both of those things in this video, so stick around to the end. Let's get right into it. First off, go ahead and take a look at this article. It is by hashtaginvesting.com. How does options trading have an influence on stock prices? It was published very recently, and when I found it very ironic that AMC was mentioned in this. So first of all, there is a little bit of an argument, and it could be somewhat debatable. Does options actually affect the stock price? And before you need to answer that question, you have to understand what the correlation between options and stock prices is. So this article explains everything about delta and gamma and how market makers will stay delta neutral. The reason why market makers exist is because if there is no seller of an option contract and you are buying at the ask or buying at market price, you always get filled, and market makers will act as an obligation to be able to fill that order. Without market makers, sure, there might not be manipulation. I know that's the first thing you're thinking, but also you would see certain times of zero volume of stocks just moving dead flat, or you would try to buy certain contracts, and if there's no seller matched up directly for you, then you would not be able to buy that contract. That is why market makers will actually exist. So as we dive into a little bit deeper, this talks about gamma and how the gamma will ramp up, which is why I'm sure many of you know as what is known as a gamma squeeze. A squeeze comes when there is unexpected pressure on the stock price, forcing investors with exposure, market makers, to the stock to change their position. Okay, a gamma squeeze creates high seismic activity in the stock price graph. It also gives a perfect example, and pay attention to this one. Jake, along with 99 other Redditors, purchased 1 week call options. Okay, they purchased the $31 on May 28th, a surge past $32, 100 call options exercisable. Market makers are forced to buy more shares so they can hedge their short position and deliver on 100,000 shares. Okay, that's exactly what happened back in May when we saw this massive run up. It also happened with GameStop. Here's where things are a little bit differently, and I also think that a lot of people have stated to steer away from options when it comes to AMC, and it is not because market makers, and this is my opinion, it is not because market makers can abuse it, it's because people don't understand options, okay? So first off, as you saw right here, $31 call option on May 28th, and the stock price went to $32. Now, in order to force a gamma squeeze, a lot of call options need to become in the money. Okay, if you have a lot of call options out of the money, that causes the market makers to be able to stay more delta neutral. All right, and their risk is not as adverse as it would be if a lot of call options were in the money. Okay, so a couple things that we talk about all the time inside the group as I trade options very well, and I say this to people every single day. The stock price, the strike price that I choose is based on a couple factors. One being volume, okay, on that contract. Two being the premium price. And three being the probability of that will actually become in the money. I do not base me buying an option contract on a YOLO. And I also do not base it on, well, it's only 20, 30 cents or a dollar. Let me just risk $100 and buy it. And here is something that I have consistently seen with AMC, a little bit with GameStop, but more specifically with AMC, that I have not seen with any other stock before. Now, granted, before AMC, I did not track this nearly as closely as I do now, but I'm going to show you guys, okay? This is April 8th call options. As you can see right here, we have volume, which changes intraday. That's what's traded back and forth. We also have open interest. Open interest gets cleared at the end of the day and reset, by the next day. And that is how many contracts are basically still open that have not yet been settled. All right. And if you look at the options chain when it comes to AMC, and this is scheduled, this is April 8th, all right, which is just in 2 days from now making this video, you have $13,051 call contracts, open interest still held, 16,040. We are 100 and 150% away from this move in order for it to become in the money. So remember those numbers, 13,000. If you look over here and go over to the 14th, which is just a little bit of time from now, about a little over a week, you scroll down as well and you see a very similar thing, $47,060 contracts. That's a 200% move. And if you look over here at the July 15th, which is a monthly, and you go to the 145 strike price, that means AMC needs to move over 700% in order to get this in the money. You have almost 87,000 contracts held open. So when people talk about options, okay, and why you don't buy options, it's because you look at people on Reddit, I look at people on Twitter, all right, and I see that they're literally just YOLOing these insane out of the money call contracts with your probability is probably less than 1%. All right, you can go look at options profit calculator, and while it might not be 100% accurate, it gives you a little bit of a rough estimate. Now, this is, like I said, something I've never seen before. If you look up other stock tickers, look at Apple, which is one of the most heavily, you can see that a lot of the action comes around the core. Okay, you look at the stock prices about 170, that's where all the open interest is, that's where all the volume is. You scroll out to Apple, and this is the same time frame, this is the July 15th, and look at it's almost next to nothing. You can go over here to Nvidia, AMD, you can look at a bunch of them. Nvidia is a little bit different, I think, just because the other day, I mean, it has gone down in price just recently, but if you take a look at it, you can still see all of the activity is around the core. You don't see these YOLOs at the 400 AMD. I mean, there's a very, very little bit. Here's where things do change. And I will say that AMC does have manipulations on the options chain. And I'm going to point it out to you. If you look over here at the January 20th, and you look at, all right, you can still 33,000 on the 145, but you also see 35,000 open interest on the 50-cent put. And that most likely is obviously a manipulation being done by either a large institution or a market maker. So that does happen, not very often if you go dig through these chains like I have, but that's the biggest difference when it comes to options. Okay. If you remember, even just the other day, I don't have last week's chain up, obviously, because it's all expired now. But there was the $40 was the highest strike price. And a lot of action was around the $20 calls, the $22 calls. All right, when AMC was at $14, $15, $16, the market was ramping. That's what led to a lot of gamma pressure pushing this price all the way up to $34 on that day. That's the difference when it comes to options involving AMC, and why some people, I believe, have said stay away from options. If you're just being naive and you say market makers are going to steal your money, you can take one step further and just say that some of the people don't understand how options work and also don't understand what they're looking at when they are buying options. I've made an entire tutorial when it comes to not only day trading options, but also buying options when you're looking at a 30 to 45 time frame. Even today, we played Nvidia. I said this to everybody inside the group. I make a pre-market list. If you're interested, it takes me about 20 to 30 minutes. I really like to put my own effort. It's my own watch list. I said everything about NVIDIA. We played it absolutely perfectly today. I said if it broke 260, we're going to look at, I believe I had the 255, or I'm sorry, guys. If it breaks 245, okay, 246 to buy the 240 call, which is exactly where we hit 240.03. This was your risk. You can see on the 5-minute chart, you break that 246. Your risk is a close over the 247.75, which is your pre-market low. And as you can see, if I zoom in even closer, it played 100% perfectly, and we got it right to 240. All right, and there's a reason why we choose those strikes. Down the video, I wanted to play the half strikes and so forth. We can get into that into another bit of time frame. But when it comes to AMC options, yes, options can influence a stock price. And it's the other reason why Unusual Whales says follow the flow. There's one reason where it could be that insiders know of a move happening, okay, such as Amazon announcing a split, Google announcing a split, okay, Elon Musk taking a stake in Twitter. But a lot of it also is just consistent call buying that will actually help move the price going forward, okay? So I hope this video just explained a little bit deeper fact or a facet when it comes to the options chain in AMC and what is being done that actually does not help. All right, so that's it for this video, guys. I'll see you in the next one.